Good afternoon and welcome to the Blue Line Metals Edge here for Tuesday, November 29th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. If you haven't checked out our website here, go to bluelinefutures.com. We really encourage you to not only take a look at the education section, you could register for a free platform where you could download, get a 2-week trial with some real-time quotes and charts. And additionally, be sure to look at our research here and take a free 2-week trial of the research. You put in your basic contact information, select which report you'd like to receive. We've got all the markets covered, everything from livestock, grains, down to the currencies, the soft markets. We'll give you actionable buy and sell signals on those markets. Now looking at the tactical reports report that came out today, you do have a lot of volatility to the upside early on. That's highlighted by these gray boxes. The darker the gray, the more volatility that occurred. We did see silver at one point was up about 51 cents today, so it really snapped back yesterday's sell-off. Gold up about $10 right now. Platinum up $10 as well. Platinum's had about a $24 range on the day. I was looking at possibly some entries right around this probable range to the downside. If we get anything anything south of about 980, 975, I think that could be a good buy. Same thing on silver. If you look, that probable range and the reversal buy points here with volatility picking up. 2074 on the downside, and the low today was 2106. If we start bumping against those lows, it's going to correspond with where the system got long on silver back on November 4th. I bought at $20.90. The sell trigger's at $20.41. The settlement was $21.12. So I'm using that 1,000-ounce contract to map the unrealized profit and loss. So it's $220 is where it's at right now, but you're going to tack on about 33 more cents. So it's up 550 here on the day. Now getting into the gold market, gold's another one that really did quite well, and it's not breaking down too much. 1755 was the low end. The probable downside range was 1746. I really like gold back to the upside as well. That's one we're going to keep an eye on those minis and micro contracts. And if you see right here, it bought the breakout. That was back on November 8th at 1730. The sell trigger 1711. This 1711 is not a spot to put your stop. Put your stop at 1737.20. That settlement here is 1755, and you'd be up $2,530. Since I put out this report, it's up at 1765, so tack on another 1,000 of that. So getting into a couple other markets that we're looking at, that ratio, not really going anywhere. Kind of surprised here that it hasn't broken out to the upside or the downside either way. So we'll keep an eye on that. Gold silver ratio right now 82.25. Bit of a choppy market coming into when you get into December into the end of the year. There are a lot of really good seasonals out there, so you want to keep an eye on that. Oliver sends out the seasonal recommendations via email. We just had one that came out on the cotton market. There's 3 different ways to take seasonals. You can either do the futures outright, follow the seasonal on the entry and the exit. You can do a call option or a call spread. So get into a few of them. S&P 500 seasonal that starts early December. Another one that's in first week of December is April Platinum. Crude oil is right around Christmas time. You start getting into there. Same thing with silver. Buy silver on December 20th, sell it out February 18th, up 14 out of 15 years. You buy February gold on December 23rd, sell it out January 11th. That's up 14 out of 15 years. So a lot of good seasonals out there in the market, so we're going to keep an eye on. Crude oil really snapped back today, up about $2 on the high. But the volatility, I was just talking with another client, it's about $4 a day right now. Throw up that average true range on the platform and you'll get that. Should be an easy study to add to the markets. You go to average true range, add it right here. And let's close this. We'll go down to crude oil real quick and you can see for yourself what I'm talking about. $4.05 is the average true range here on crude oil on the day. So a lot of people, they can use that to measure the volatility and also stop placement on your positions. So if you can't weather $4 on crude oil, you're going to want to go to those micros or those mini contracts. So not a lot otherwise standing out here today. We are seeing natural gas. It was pushing up. A lot of you got call spreads on. The The grain markets, they were stronger on the day. They started to come back. The dollar index about unchanged on the day. We're getting into some more of that holiday type volume. So I'm going to put out a write-up on Kitco on Friday. I'll start posting also on bar charts some of these videos as well as the breakfast report. But if you guys really want anything, any other reports, any other analysis, you want me to shoot you over some of these seasonals, let me know. I'd love to get it out to you. Again, if you have any questions, futures options trading, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trade.